introduction of economics. In the introduction of economics, the first, what is economics? Economics is the science of analyzing. We need to analyze the production, distribution, and consumption of the. It is related morely to the goods and services that a society uses to address the problem of scarcity. So, what is economy? Economy deals with the scarcity of the resources, how the scarcity of the resources are counted. Economics is the study of economy. Aim to transform the resources. The resources are being transformed into useful goods and services. The act of production, then distribution to useful ends. The act of consumption. Right. Now we'll be having the transformation of the resources. The resources are transformed into useful goods. The resources needs to be transformed into a useful good or a service, the act of production, then we are distributing it. When it is transformed into a useful good, we need to distribute it. Now, what is an economic and non-economic activities? Economic activities is carried out in exchange for money to earn a living. For example, individuals work in a factory to earn cash. Non-economic activity is without any monetary motive. So we have a non-economic activity which means that it is not having any monetary motive. Any monetary motive is not present over the non-economic activity. In the economic activity, we be having that exchange of money or for monetary motive is found. Now, what is the different economic activities? For the different economic activities, we have the primary sector. Primary sector is where all the economic activities which are undertaken by or using exploiting the natural resources directly are grouped into the primary sector. When natural resources are involved, it is known as the primary sector. Mining, quarrying, farming, poultry, fishing, animal husbandry, forestry, agriculture, everything belongs to the primary sector, right? So in the primary sector, we say that the all economic activities which are undertaken by using or exploiting the natural resources directly. When we use the natural resources directly, natural resources, when we use the natural resources directly, it is grouped into the primary sector. It forms the base for all other products and that we subsequently make. It includes the agriculture, forestry, and animal husbandry, fishing, poultry farming, mining, and quarrying is involved over here. Now, what is a secondary sector? When these natural products are changed into other forms of finished items through ways of manufacturing. So, the natural products are changed into other forms of the finished items. We have a natural product, right? The natural product is changed into, so the natural products are changed into other forms of the finished items. The natural products are changed into the finished items. It is known as the manufacturing or the secondary sector. It is also called the industrial sector. For example, we are making clothes from the cotton fabric, cotton fiber, or we are making sugar or gur from the sugar cane. Now, what is a secondary sector? It covers the activities in which the natural products are changed. We say that the natural products are changed into other forms. Natural products are changed into other forms or a finished group items through ways of manufacturing. It is called the industrial sector. So, secondary sector is also called as a industrial sector. For example, the clothes which we make from the cotton fiber, or making the sugar from the sugar cane. tertiary sector. What is a tertiary sector? Activities for the development of that help in the development of certain activities that are covered over here. They help. The activities are going to help in the development of the primary and the secondary sectors. The activities involved over here, they lead to the development of the primary and secondary sector. These activities by themselves do not produce any good, but they support for the production processes. For example, providing transport facilities to move goods from factories to the shops. They are not producing any goods. So the tertiary sector, here we say that tertiary sector by themselves do not involve in production of any good, but they are supporting for the production processes. This example includes providing transport facilities to move goods from factories to shops. It includes a trade, transport, communication, banking, education, health, tourism, services, insurance, etc. Quaternary activities is going to consist of intellectual activities often associated with technological innovation. A technology has been innovated. This is what we call it as the quaternary activity. A new technology is being innovated. So here it is going to include the government where it results in the governance, right? And government is included in the quaternary, and culture, libraries, scientific research, education, information technology, IT. Queenary services include the top executive officers and officials in such fields such as the government, science, universities, non-profits, healthcare, culture, and the media. All the top executives are included in the queenary activities. Domestic activities also sometimes mentioned in the queenary sector. So we have something known as the quaternary activities, where intellectual activities resulting associated with the technological innovation, and tertiary activities which help in the development of primary and secondary activities. By themselves they do not produce a good, but they support for the production processes. Now, secondary is when the natural products are changed in their in other forms or finished items through ways of manufacturing. Primary is when all the economic activities which are undertaken by using or exploiting the natural resources directly are grouped into the primary sector. We have the factors of the production. Is land is a factor of production. The natural resources available for the production, and entrepreneurship, entrepreneurs, enterprise organize the factors of production and takes the risk. Capital is when the goods used in the supply of other products. Labor, the human input into the production process. Factors of production are the inputs available to the supply of the goods and the services in the economy. What are the factors of the production? Land, labor, capital, entrepreneurship. Land is a naturally occurring material resources used for the production of the goods and services. So land is used for the production of the goods and services, including the land itself, minerals and nutrients, water, wildlife and vegetation on the surface and above the air. Labor, it is the mental, and then we have the physical efforts of the humans, excluding the entrepreneurship. So in the labor, we'll be having the mental as well as the physical efforts of humans. So we'll be having the mental as well as the physical efforts of the humans, excludes the entrepreneurship used for the capital production of the goods and the services. Capital is a manufactured synthetic goods used in the production of other goods. When a synthetic good is used in the production of the other good, a synthetic good which is used in the production of other goods, which includes, this is going to include the machinery, equipment, machinery, equipment, tools, buildings, and vehicles. Entrepreneurship, human effort which takes the risk of bringing the labor, capital, and land together to produce the goods is what we have the entrepreneur. Where human we have efforts are used to bring together the labor, capital, land. Factor payments is nothing but the payments which you make. So the payments made are known as the factor payments. Now, when do you make such payments? When wages are paid for the labor for their services. Wages are paid to the labor for the services they provided. For the services they provided. Wages are being given to them. Interest is for the payment of for interest is the payment of services of the capital. When you have a capital, if it is through a loan, you need to pay interest payment for the capital. And when you have a capital on your own and you rent it out, you get some interest on the capital. Now, when we be having a land, the land we have rent, right? Profit is a factor due to entrepreneurship. Now, from the factors of production, we get factor payments. From the factors of the production, right? We are going to get the factor payments. Factors of production. From the factors of production, we have the factor payments. Now, the factor payments is for the labor. Factors of production, we gave them rent. Labor is wages. Land is rent. Then we have the factors of production and factor payment for entrepreneurs. The entrepreneurs get profit, and for capital or from the capital, interest is received. Here, land we have resources are being used. For example, a farm, crops, right? It can be rented out. For labor, when you are using physical and mental input, workforce, we give them wages. Capital, we have fixed and in the working capital, machinery. Machinery is a fixed capital, whereas the wood used to produce a table through this machinery is a working capital. Interest. Entrepreneurship is the organization of the factors. The manager is going to have the profit. Non-factor incomes. Certain money receipts do not involve any sacrifice on the part of their recipients. For example, gifts, donations. No production activities is involved in these incomes. These are called as a transfer incomes because such income merely represents a transfer of money without the goods or services being provided in return for the goods. They are not included in the national income. When we have a gift or a donation, it is a one-sided payment. We do not give any good or service in return. Right. So factor means it is related to the goods or services. Goods or services. Factor is related to economic activity. Whereas we have non-factor incomes is when they do not involve in any economic activity. They are just transfer of the money from one person to another, right? So they are called as a transfer payments or non-factor transfer payments, or we call it as a non-factor incomes. Transfer incomes. Non-factor incomes. So we have them as the transfer incomes and non-factor incomes. They are not included in national income. This is a correct statement. So the transfer income or a non-factor which is an income is not included in the national payment. What is a physical capital versus human capital? It is tangible. Tangible subjected to wear and tear. So we have that it is tangible, which is subjected to the wear and tear, and it can be easily sold in the market like any other commodity. Whereas human capital is intangible, built in the body and mind of its owner. It is not sold in the market, only its services are sold. Human capital not sold in market. Only services from the human capital are sold. It can be separated from the owner and it is inseparable from its owner. The mobility, it is completely mobile between the countries except some artificial trade restrictions. It is perfectly immobile between the countries as the movement is restricted by nature and nationality and culture. It can be built even through the imports. It is done through conspicuous policy formulations. Benefits is creates only private benefit, benefits both the private and society. Economic agents of the economy. So factors of the production versus the agents involved in the economy. Agents in the sense they facilitate for easy doing of any activity or what we call it as an agent. When we have factors of production, we need some agents like catalysts who help in these factors of production. Oh, the first agent is the household. What happens from the household? Household provides for labor and they demand, first is they provide labor and they demand goods and services from market. No, the first is all the households. Households include all the people who are living under one roof. They are considered as a household. So, what is household? When all the people are living under one roof, people living under one roof, they are called as considered as a household. They are demanding goods and services from markets. They supply labor, even capital, land, entrepreneurship ability to resource markets. They give their land, labor, capital and entrepreneurship ability comes from this household, right? They undertake consumption expenditure, which is money, total money spent on final goods and services by individuals for personal use. So they undergo what is called as consumption expenditure. When they demand for the goods and the services, they undergo this consumption expenditure. They undergo consumption, right? So it is known as the consumption expenditure, which is the total money spent on the final goods and services by the individuals for personal use. Now, what is a household? All the people living under a roof, they demand goods and services. When they are demanding goods and services, it is involved in the consumption of expenditure. Consumption expenditure. So it is involved in the consumption, right? When they demand goods and services, it is involved in the consumption expenditure. It is involved in the consumption. which is the total money spent on the final goods and the services by individuals of personal use. Then they provide for the supply, the labor, capital, land, entrepreneurship ability to the resource markets. First, we have a normal market where there is a demand of goods and services. We have a resource market where there is a need for the resources like land, labor, capital, entrepreneurship. Firms, they combine all the four activities acquired from the household to pursue their economic activities. The primary they primarily produce goods which satisfy the wants and needs of the house. Films are used for combining the services of all the four factors of production. These four factors of production are acquired from the household. All the four factors of production are land, labor, and then we'll be having the wages, rent. All the four factors of the production are combined over here and they are acquired from the household sector, right? When all the factors of production are combined, all the factors of production are combined to pursue their economic productive activities. Then there goes for a productive activity is being done. The goods are produced to satisfy the wants and needs of the household. Government intervenes in the economy by collecting and spending tax revenue and by establishing and enforcing law. So the role of the government is with related to the taxes and establishment of the law. Government is going to intervene in the economy. They collect and spend the tax revenue and establishing, enforcing laws, rules, and other regulations. They promote the competition, regulate natural monopolies, and produce public goods, redistribution of the income, employment, price stability, and economic growth. So, what are the activities in which the government is involved? The government is involved in the competition, promotion of competition, first tax, and establish the laws. Then it promotes a competition. It regulates the natural monopolies, regulation of the monopolies. It also produces public goods. It redistributes income, employment, price stability, and economic growth. What is the foreign sector? Primary role which is played by the foreign sector is foreign trade. The domestic households, businesses, and government sectors purchase imports produced in a foreign sector. The foreign sector buys the exports which are produced by the domestic business sector. Now, what is a circular flow of the economy? There is no government or the external sector as a foreign film in a simple economic model. Households receive their income from the film, and then from for services they provide for the films. So households are receiving the income that is a salary for their services and they dispose this entire income only in a way of spending it entirely on the goods and services. Therefore, households do not save anything. The entire income of the economy comes back to the producers in the form of sales revenue. The firm again uses this revenue to pay for the factor services and thus creates a loop again. Double coincidence of the wants is in the barter system. So we have double coincidence of wants is a topic which is present in the barter system. It is meaning that a shortcoming is that an exchange can only take place if both the parties want exactly the same thing that the other party has to offer this at the same time. Both the parties have to agree to the sell and buy each other's commodities. This is what we call it as a double coincidence of wants. What is the opportunity cost? Opportunity cost is the benefits that an individual misses out when choosing one alternative over the other. Right.